Unit 2, Income Tax, Exemptions and General Deductions Formula, Lecture 2, Deductions. Deductions. As we continue working through our taxable income framework, we are now at step number 3, deductions allowed in terms of the Income Tax Act. Unlike exemptions, a deduction does not have to be included in the gross income of a taxpayer in order to qualify for a deduction from income tax. The general deductions formula allows for many expenses, not specific ones, which are incurred in the carrying on of a business or trade, to qualify as deductions in terms of the Income Tax Act. In general, these deductions are only allowed to self-employed taxpayers who carry on a business or trade. Section 11A sets out what may be deducted, and Section 23 stipulates which expenses may not be deducted. In terms of Section 11A, when determining the taxable income of a person from carrying on a trade, there will be allowed deductions such as expenditure and losses actually incurred during the year of assessment in the production of income, provided that such expenses are not of a capital nature. Any expenses relating to private or domestic matters are disallowed. And lastly, an employee who mainly earns commission based on sales may also claim deductions. In summary, the expenditure must be actually incurred, it must be in the current year of assessment, must be in the production of income, and expenses must not be of a capital nature. All of the following items do not qualify for deduction for income tax purposes: any fines or bribes, losses due to theft, social responsibility expenses, recurrent expenses, or any ex gratia payments, meaning money paid as a favor or a gift to another person. Examples of some expenses that do qualify as deductions: advertising costs, salaries, rentals of property and equipment, cost of trading stock, traveling expenses, and electricity and water expenses. Home expenses may also be deducted if a part of the home is occupied for purposes of trade, if it's regularly and exclusively used for trade, or exclusively equipped for trade. If a trade is a person's employment, no deduction is allowed, except if more than 50% of income is derived from commission and the work is primarily performed at the home. Some expenses that may be deducted are rent, interest on a bond, rates and taxes, as well as telephone and electricity costs. Section 23 of the Income Tax Act disallows the following: any deduction of private expenditure, any loss or expense which is recoverable under a personal guarantee or insurance contract, and any expenditure that does not relate to the trade of a business. Specific deductions from income. The new retirement reform, with regards to the deductibility of retirement fund contributions, came into effect on 1 March 2016. Under this new legislation, there is no differentiation between retirement funds. All employer contributions will also be regarded as fringe benefits and will have to be included in the taxpayer's gross income. The deduction is total contributions limited to 27.5% of the grade of remuneration or taxable income, but limited to R350,000 per annum. Any excess contributions may also be carried forward to the next tax. George Best has the following incomes. He is also a member of his company's pension fund, and George contributed R80,000 towards the fund. His employer also contributed R70,000. Calculate the deduction George is entitled to. The first step is to calculate George's taxable income before the deduction. This is an amount of R580,000. For the retirement fund deduction, you will take total contributions to the fund, limit this to 27.5% of remuneration, meaning income from employer, or taxable income. Since taxable income is greater than remuneration, you will base the 27.5% on your taxable income amount. Your answer will be R159,500, but the deduction will be limited to actual contributions. Donations to a public benefit organization may also be deducted under Section 18A of the Income Tax Act. These donations may be in cash or any other kind of donation, and the PBO has to be registered with SARS. This deduction, however, is limited to a maximum of 10% of taxable income before this deduction, excluding any retirement benefits. Any excess amounts may also be carried forward into the next tax year.